Welcome back to our channel, where we bring you valuable insights into the world of finance. Today, we have an exciting topic to discuss that can help you maximize your earnings. The Foreign Source Income Exemption, also known as FSIE, in Hong Kong. If you're an individual or a business owner with overseas income, this video is a better understanding for you. So, let's dive right in. And if you like this video, drop a like and subscribe to Connect Dots channel for more business tips. We are Connect Dots Limited, a corporate service provider. Our experienced specialists serving many different entrepreneurs over the last decade is ready and here to provide comprehensive advice to you. We have the whole team here to manage your particular startup, company bank account opening and company maintenance needs, including registered office address, company secretary, and many more. According to Hong Kong Inland Revenue Department, the latest international tax standards require a taxpayer benefiting from a preferential tax treatment in a jurisdiction to have substantial economic presence in the jurisdiction, and to establish an explicit link between the relevant income and real activities in the jurisdiction. With a view to supporting international efforts in combating cross-border tax evasion and preventing double non-taxation, Hong Kong committed to amending its Foreign Source Income Exemption, or FSIE regime for passive income in accordance with the guidance on FSIE regimes promulgated by the European Union or EU. The Inland Revenue Amendment, Taxation on Specified Foreign Sourced Income. Ordinance 2022, the 2022 Amendment Ordinance, was enacted on the 23rd of December, 2022 to put in place a new FSIE regime for foreign source dividend, interest, income derived from the use of intellectual property or IP income and gain or profit derived from the sale of equity interests, other than partnership interests. In an entity, equity interest disposal gain, accrued to and received in Hong Kong by a member of an MNE group or MNE entity with effect from the 1st of January, 2023. In December 2022, the EU promulgated an updated guidance on FSIE regimes, updated FSIE guidance, which explicitly sets out disposal gains as one of the categories of passive income covered by an FSIE regime. Jurisdictions with ongoing FSIE reforms, including Hong Kong, are requested by the EU to further amend their tax treatments of foreign source disposal gains in compliance with the updated FSIE guidance by the end of 2023 for implementation with effect from January 2024. To bring the FSIE regime in line with the updated FSIE guidance, the Inland Revenue Amendment, Taxation on Foreign Source Disposal Gains, Ordinance 2023, the 2023 Amendment Ordinance, was enacted on the 8th of December 2023 to refine the FSIE regime. Under the 2023 Amendment Ordinance, the scope of assets in relation to foreign source disposal gains is expanded to cover all types of property. The exception requirements provided under the 2022 Amendment Ordinance, that is economic substance requirement, participation requirement and nexus requirement, remain unchanged and are equally applicable to different types of disposal gains. A new intragroup transfer relief is introduced to defer charging of tax if the property concerned is transferred between associated entities, subject to specific anti-abuse rules. The 2023 Amendment Ordinance becomes effective from the 1st of January 2024. Key refinements for disposal gains. Covered income. The current Foreign Source Income Exemption, or FSIE regime, currently only applies to disposal gains related to equity interests in an entity. However, under the refined regime, the coverage of disposal gains will be expanded to include the sale of any type of property. Property, in this context, refers to both movable and immovable assets. Immovable property typically refers to land and buildings, while movable property encompasses all types of assets except for immovable property. This means that the expanded scope of disposal gains could potentially cover all types of assets. Exclusion for traders. To acknowledge that the FSIE regime does not apply to active income, disposal gains from assets, excluding intellectual property that are derived from or incidental to conducting a business as a trader, will be excluded. A trader refers to any entity that regularly sells or offers to sell property as part of its normal business operations. For example, if a company engaged in securities trading sells shares listed on a foreign stock exchange, the profits from such disposals would be excluded from the refined FSIE regime. Intragroup transfer deferral. Under the refined FSIE regime, tax on disposal gains can be deferred if the transfer of an asset occurs between associated entities. The entities are considered associated if one entity holds at least 75% direct or indirect beneficial interest, or voting rights in the other, or if a third party is associated with both entities. This provision allows for the postponement of tax payments on disposal gains when assets are transferred within a closely connected group of entities. Meanwhile, the intragroup transfer relief would be subject to specific anti-abuse rules as follows. Both entities selling and acquiring the asset are required to be chargeable to profits tax in Hong Kong within 2 years after the transfer of the asset. And the entities selling and acquiring the asset are required to remain associated within 2 years after the transfer of the asset. Otherwise, the intragroup relief will be revoked. Exception requirements. Foreign source disposal gains on different types of assets would not be chargeable to profits tax if the following requirements are satisfied. Other features remain unchanged. Other features of the refined FSIE regime are highlighted below, which would remain the same as the existing FSIE regime. Covered taxpayer. Entities of multinational enterprise groups carrying on business in Hong Kong. Exclusions. Disposal gains derived by regulated financial entities and taxpayers benefiting from the preferential tax regimes. Economic substance requirement. Substantial activities test for non-pure equity holding entities, reduced substantial activities test for pure equity holding entities, and adequacy test. Double taxation relief. Bilateral tax credits for taxes paid in jurisdictions with tax treaties with Hong Kong, and unilateral tax credits for taxes paid in jurisdictions without tax treaties with Hong Kong. Treatment of disposal loss. For set-off against FSIE income only. As we reach the end of our exploration into the Foreign Source Income Exemption or FSIE in Hong Kong, we hope you've gained valuable insights into this powerful tax advantage. Don't let your overseas income go untapped. FSIE can be a game changer for your finances, boosting your savings and enhancing your financial flexibility. If you found this video helpful, remember to hit the like button and share it with others who can benefit from this information. Stay tuned to our channel for more empowering content to help you navigate the world of finance. Wishing you financial success and prosperity.